Hey everybody, it's Mark Yegge. Welcome back to another weekly stock market update. If you don't like bad news, this is not a good weekly stock market to be on, update to be on. So you probably should shut it off right now, because I got a bunch of charts that do not look good. So let me show you some of that action because tell you it's not been a pretty week, especially for me. Anyway, these I guess it's all part of the game. But anyway, here is what's going on. The market went green for one freaking day, and then now it's gone yellow. We got 3 red lights and a green light. So it's looking negative, and it's making what I call a dreaded H pattern on the chart, and that portends lower prices. So we got to hold this $15,000 level on the New York Stock Exchange, or we're headed for lower prices. And if we go lower, we're going to go a lot lower. Market does not look like it's healthy at all. It's seeing some weird stuff. So let me show you the weird stuff. Look at this channel. It's a downtrend on the NASDAQ. It's below the 50. It's heading down to that little swing point of 12. I think it's what, 1263 on the chart. And it wants to go to that 200-day moving average and test that. That's the strongest one, or one of the strongest ones. It's below the 50 though. Nothing good happens below the 50. But look at these. Here's one that's testing the 50. That's the S&P 500. Right at the 50 right now. I suspect we'll get a bounce out of the S&P 500, and maybe that'll lead everything else up. Who knows? I don't know. But this is the bad stuff going on right here. This is the Dow. It's basically spent 3 out of the last 4 weeks hanging out with its buddies under the 200-day moving average. That's not good. You know, things hang out below the 200-day moving average. That's not good. Things are not good under the 200. I don't know how to say that, but that's just not good. And we thought we had a little bit of a recovery last week, but 4 days in a row this week, it's under the 50. Again, did I say not good? I'm going to say it again, not good. All right. The same thing with the New York Stock Exchange composite. This puppy has been for a month below that. I suspect a lot of it's because the oil and the airlines are in the New York Stock Exchange composite. And the airlines, you should see the chart. It's just a disaster. I don't know what's going on in the airline business, but I keep saying it every week. I can't believe how much lower it keeps going. I'm going to show you all this stuff. This is cool stuff. The New York Stock Exchange Airline Index. There it is. Boom. Look at that chart. It's like a slope. It's like a double black diamond if you like skiing. There's a death cross going on that's happened a couple of weeks ago. There's a big old just gap down today. Big sell-off yesterday. Like this is horrible. This is horrible. I don't know what's going on in airlines, but to go from 80 to 50 in just a couple of months, it's not a stock, it's an index. That means all the airlines are going down. Rough. It is oversold if you look at the stochastics, though. All right. Same thing here on the T-bond. This is a weekly chart on the T-bills and the T-bonds. This is a 20-year treasury. All this is the safe money that all your brokers were telling you, oh, you should have some money in bonds and you make a nice safe income of 2 or 3%. Well, yeah, now it's 5%, but bonds have gone down 60%. So while you were making your nice little safe income of 2 or 3%, your bond portfolio just got cut in half. So you lost basically, if you made 3% in a year and you got 3 years out of that, you got 9%, but you lost 50, 60. So you lost a net of 51. It's not safe money, folks. That's the Fed messing around with our money. Things are happening and we're in trouble. And this is the chart that shows you. So, I've been saying this for 2 years that the bond market is done. We had a 40-year bull market and it's over. And there's going to be a point where it bottoms, by the way, because interest rates are going up and people are going to be like, well, shoot, I can get 5%. Problem is you're not paying 5% more than you paid for things last year. You're paying 15, 20, 25% more than you paid for things last year. Look at the value of houses, even though they're stagnating because of interest rates right now. Not good. All right. I told you it wasn't going to be good. I told you. I warned you. All right. The Dow Jones Transportation Index, again, not good. It's broken below the 50, the 200. It's doing it today. It's leading the Dow down lower. There's not a lot of good stuff. You know what? I could keep going on, but I don't want to keep going on with bad news. It was a bad week in Tesla. Tesla had a big gap down, filled the gap, which is a good thing. And I'll show you the chart on Tesla. And it's filled that gap on that arrow on the right. There's another gap in play, though. That's the problem. And now it's testing its 200-day moving average at about the 212 level. So it's been a rough week for everybody. Apple is down. Tesla is down. NVIDIA is down. SMCI is down. They're all down. Everything's down. It's been rough. And if you're in the stock market, you're experiencing volatility. By the way, I think that's the theme for the next 5 years, volatility. So if you can play the volatility game and make money, that's what we do in the cash flow machine. It's been tough this week. I'll admit it's not easy, but you get income at least. Most people don't even get income from options in their portfolio. That's what we do in the cash flow machine. If you're interested, let us know. Go to cashflowmachine.io. Happy to talk to you about that and have a conversation around how we create reliable income from the market. But when the market goes down, stocks go down too, even though you're getting the income. So that's all I got to say about that. Told you it was going to be a rough little report, didn't I? And it was kind of rough. But the good news is there's always another bull market coming somewhere. We've got a weekend coming up right now. So go out and have yourself a fantastic weekend. And let's get back at it on Monday and make it a great week. Take care, everybody. Thanks for being here. See you next week.